Okay, welcome everyone. Welcome to the Hurley Investments Market View Commentary for June the 26th. I should probably save this so that I have it all taken care of. Save as Hurley classes. Come on. Webinar 06/26/2023. There we go. I was going to talk about the briefing picture, how the stock market diverges from a recession view, and they say two roads diverged in a wood, and I took the one less traveled, and that has made all the difference by Robert Frost. Well, last week, I ended up taking a youth group out to the Bridger National Forest, the Wind Rivers area. Not a bad hike. Literally, we were parked right down here. That's where we were parked. So the first 2.4 miles brought us up that high, and you can actually see our cars are right there in the field. Hi, Maud. So last week, what I was doing, why Keith took over, this was our first 2.5 miles. And I was so whooped. It was unbelievable. My butt was kicked. You just keep seeing the immensity of it. Look at how dark some of the clouds are. I'm trying to scan down where we're at. But we just kept hiking higher and higher up into the mountains. Yes, it rained on us. There's my son and a couple of his friends. What a amazing trip we went on. Testing ourselves, doing something hard. You can see how high we got up. In the early 90s, the Bridger National Forest, the Wind Rivers, had a serious fire. All the new trees are up, the dead old trees we used for firewood. You can see the snow line out there. We were just running into the snow line. Had to eat some brook trout. Got to enjoy eating some Dolly Varden. One of the kids, I swear, was a little elf. So we just had a good time hanging out up in the mountains, doing some hiking, having kids run around in trees. That's the kids acting tough, but a good time being able to truly get out there and kind of do a hard thing. When I thought about today, the first thought is, what do you do when you run into hard things within the market? And this comes from a 16.4% loss occurred yesterday, and yesterday occurred last week in a single 6-figure portfolio. So I want to hear from you guys. What do you do? Maud, I'm glad I didn't get eaten by a bear either. What do you do when you run into hard things within the market? And again, this relates to Winnie the Cheer, and that we had this discussion about your portfolio this morning. So I like it. You can learn from it. Obviously, if you had that return in your portfolio, you were positioned improperly, right? Either had no protection on, you were too bullish, maybe too tech heavy, too, I don't know, REIT heavy, too bond heavy. But you've got to look at it a different way on what changes you're going to make. Second one, make changes to fit current market conditions. I agree 100%. I mean, that's kind of a no-brainer, right? Learn from the event and adjust if warranted. Adjust if warranted. But I'm going to tell you, if you're down 16.5% in your overall portfolio, it's warranted. I really love this one. Do a better job paying attention and researching the market. 100% agree, right? Let's face it, in real life, right? In real life, the market is that dang tiki. The market isn't easy, and there is no easy fix, i.e., algorithm, system, higher return, AI. I mean, all that is crap. I am shocked at the educational system that suckers people into spending money for the magic fix. That's always on no emotion, no emotion, fake trading. We already know what's going to happen. So we know what trades to put on to make the results look good. It's just a pile of crap. Which again brings us back to needing a 10-foot fire when you have rain coming down on you, right? It really, too bad we can't see the night. Having to get more fish because a bear gets into your bear bag and your treed food. having to go up another 2 miles to a lake where there's graylings and Dolly Vardens that'll hit on anything. But it means another 2.5 miles to hike up to right in between that peak. What it really comes down to, right? What kind of work will you give yourself or do for yourself? I don't know if you can see that. Nothing like taking a picture of the sky and getting the Big Dipper. It really comes down to, what do you feel you can do that's going to make a difference? Because everyone's going to have an accident. Everyone is going to hook yourself in the finger with a spinner of some kind. That is what you do. It is guaranteed to happen. Look at his face. If you could just see his face. He's like, you know what, Dad? This lake sucked. I got the spinner in my finger. It did not go the way it was planned. And it's funny because someone just asked, do you have to get a satellite phone that works there? Yes, you really have to rent a satellite phone from the local outfitters or from from search and rescue. And when it comes down to it, you know you've got to keep yourself alive for 2.5 to maybe 3 hours at the earliest until they'll be able to locate you and get you back to where there's help. Which kind of leads me into the second question, right? What do you do to hedge a portfolio for protection to live another day? And it's funny because the question I was told, or the answer I was told get out and reset the portfolio. So why didn't you do it? Your portfolio, your whole account lost 16.4%. You set an exit or an adjustment strategy. Hey, if I'm wrong, I'm going to bail out of it and I'm going to reset my thinking. Yet, what happens to 99.999999999% of all people that manage their own portfolio? They set their rules, they're ready to go, and they don't do it. One more time. There is no help up here. If you make a mistake, watch the gentleman fall on the left-hand side. Right there on the left. Donk in the water. If you fall and make a mistake, yes, that's me. It's hailing on us. That's what I look like when I'm just beat. There are just some things you can't make a mistake on. There's some things that mistake. So that was my son that you saw earlier. That's him as a little kid. There are some things you can't make a mistake on. And a short answer, there are some things that you can't make a mistake on. And what does that really come down to? Losing everything. I'm going to make the comment. The market doesn't make sense right now. It just doesn't. We're up a pretty significant amount, and it's not warranted. There's no reason our market should be up year to date. There's nothing that's happening in our market with the inflation that says we are good to go and we are off to the races. Nothing has happened that justifies our run up. I really enjoyed some of their comments here. Total CPI was up 8.2% year over year last September. Core CPI is 6.6%. CPI 4.4% every year, CPI 5.3. It's coming down, but it's still increasing year over year. We're not negative. A year ago, 8.2%. This year, 4.0. The previous year, 10. We have 20% inflation in the last 2.5, 3 years. Rate hikes are going higher. Things have changed. Typically, longer dated maturities have higher yields than short dated maturities because one is taking more risk for a longer holding period. When the S&P bottomed last October, the spread between the 2-year yield and the 10-year yield was inverted by nearly 40 basis points, meaning the 2-year note yield was yielding nearly 40 basis points or 0.4% more than the 10-year. That's not supposed to happen. That's worrisome because no one wants to hold U.S. debt right now for longer periods of time. We have lost some, how would you say it? We have lost some credibility yet again in the world for those that want to own our debt. I really like what it means. The relatively calm demeanor of high yield spreads, however, continues to be a feather in the cap for the proponents of the spending no landing view. It runs counter to the recession outlook that is presumably being presented by 14 straight months decline in the leading economic index. Finally, someone is telling us that this doesn't make sense. With that said, we are still technically bullish on the Dow. Today we just got below the 49.77. We've held the 50-day for a couple days in a row. We just don't quite have our crossovers for the MACD. We are in a position to, if we lose the 50-day on the Dow, that we're going to have a pretty good drop. So we're getting ready to start adding more protection into portfolios. The S&P, we're still bullish. We're holding a pivot point. We technically have gone up too far, too fast. We do not have our crossovers, but we're going to spend some time right around that 4,300 level looking to make sure that we have protection on for a drop farther down to the 4,200 level where we seem to get those bounces, right? We're just saying we don't know exactly what's happening. Two roads diverged in a wood, and the market right now is taking the one that is really less traveled. We're not bearish on the NASDAQ yet. We're just coming down. We broke a pivot point today. The R1 support level is supposed to be resistance, but it's the R1 level. We're spending a lot of time watching the market. We're still thinking we're going to have a nice 2% plus return on the S&P 500 for June. July is going to be a little different. At least we think, right? So I should go to what it means, right? What it means. More protection is ready to be added for a drop farther. Now, there's going to be a little key to that. Sorry, I've got a couple phones in the background that are not muted. There's going to be a little hitch, right? Next Tuesday, the market is closed. And historically, it is a dead week. Dead week equals flat. So we at Hurley Investments are planning on no webinars and just watching the market with added protection. We also are still fighting Schwab for the last of the accounts to get over, which means we may be calling you to add protection in the Schwab login accounts. And that's really about the best we can do. That's how we're looking at it as we're sizing things up. Tomorrow will be a big day. Tomorrow will be a big day as we look at a couple stocks we own. As we look at Google L, the stock just turned bearish, has its crossovers, yet it held a pivot point and has the 50-day right underneath it. An interesting spot to see Google L. In fact, we found it so interesting today, especially after as we were looking at things this morning. A little shocking, right? USB downgrades Alphabet, Google L, for near-term monetization risk. So on one stock, they're saying, hey, we've got to have some type of how do you say it? Some type of inflation risk that companies won't be using your advertising as much. Tesla got hit today. We're downgrading Tesla from neutral from buy, as we now believe the stock now better reflects our positive long-term view of the company's growth potential. Walmart gets reiterated as a growth. Coinbase is an underperform. Duh. Brinker is underweight. Duh. Sherwin-Williams from outperform to market perform. People are not going to be having the money to paint their homes. Tesla's at a buy for Deutsche Bank. Bernstein says Uber still an outperform. Citi reiterates Boeing as a buy. We are buyers of Boeing on weakness related to the strike news, as any disruption deliveries is likely to be temporal, not structural, or is likely to be short-term, not long-term. Roth, a no-namer, Roth MK, names Amazon as our top pick. Hasn't made money, lagging all the other technology, but now it's going to make money. Morgan Stanley rates Palo Alto's overweight. Lululemon is overweight by Piper Sandler. USB rates Meta as a buy and raises its price target to $335. A lot of people thought we were crazy for those that went into Meta, and we initiated a month ago a leap bull call, but it seems like we've guessed that one right. Or we did the homework that justifies being in that position. Loop reiterates Disney as a buy. We just found it interesting. It's some of the opportunities, and I love this one too. I must well open it up for you. It's some of the other opportunities that people are now seeing that it's like, duh. Investors looking for big gains while also resting easy at night can look at these stocks. The first one that they have on their list was Disney. It's got a 33% expected consensus or growth in it in the near future. It has everything in place to do just fine. So we found it a little bit interesting at where we can make some money coming into this year. And a lot of it is nothing more than what we've already seen. Carnival Cruise Lines today didn't do very good. Walmart Boots Alliance has its earnings tomorrow. GIS, BlackBerry, Fuller Homes, and Micron reports on Wednesday. We have Nike on Thursday, and we have Constellation Brands on Friday. GIS, I should know exactly what that is. And I am brain farting it. General Mills, there you go, sorry. General Mills, and this is another opportunity. General Mills is holding on to the 200-day. Very easily with good earnings on Wednesday. Could go from 81 to 85 and retrace the drop back up to 90. A very interesting one to look at for a short-term earnings play. When come Friday, the market will go low volume and basically be dead for the 4th of July week. Economic reports. Everything really comes tomorrow. Durable goods, and you have durable goods, X transportation. Yeah, the FHFA housing price index. We have the S&P Case-Shiller report, another housing market report, consumer confidence, and we also have new home sales. That is truly our week. With that said, we do have GDP numbers. Let's face it, they have been extremely suspect and higher than expected. Pending home sales. And then on Friday, they should be important, but they're not. Personal income, personal spending, PCE core, which is again an inflation one, PCE pricing without the core, and the Michigan sentiment. But by this time, you will have seen big money be out of the market by Friday. So it's just something to pay attention to. For people that were asking, how are we looking to trade? We are adding protection based on technical analysis on indexes and individual stocks. So we had a good run the last 5 weeks. We're starting to go for more protection. I found a very, very interesting article in regards to if a recession is coming. I agree 100%. It's a 71% recession probability, which only tells me that with an election year, you got to believe the government is going to print more money. They're going to solve it by throwing more money at it than anything else. A little bit pathetic. Very interesting article. If you look past the DeSantis political rhetoric, Disney looks to be in great shape for a huge run up. Here's all the numbers that justify it. You can take a look and you can make your own choice, but I wouldn't be voting against Disney. Let the numbers tell you what you think you should do. I don't like REITs, so let's pick on some REITs. 3 sell alerts for 3 REITs that likely will cut their dividends. I've got them listed here as the BDN, the Brandywine Realty Trust. What a joke these guys are. They're almost bankrupt, by the way. The Granite Point Mortgage Trust. Would not be looking at this one with their heavy office or commercial exposure. And the SL Green Realty Corp, the biggest landlord of New York City. Let's face it, the state has problems. The state looks even worse. So just something for you to be paying attention to. Apple. What if Apple wins the NBA rights for hosting the NBA games for 2025? It could be a game changer. And they have the money to do it. I wasn't sure what could move Apple higher. In fact, to a certain degree, we've been trimming Apple a little bit as it's gone up to this fully valued mark again. This could be the game changer. This could be what moves Apple even higher and above the 200 level. A pretty interesting article on a catalyst that would move Apple into that $225 range from where it's currently at. All right, so with that said, any questions for me? Any questions you guys have that I can answer? Any questions on what's going on and what's happening? If Disney is projected to improve, why was it sold assuming taking a big loss? So we do have some puts in place. And Russ, you might have an account that's kind of in that limbo that we are willing to have the puts book your profits and book you out of it to get back into it when we get your accounts over. But we did pull out of the LEAP calls at the beginning of the year. What about the Chinese market? Doesn't that look good, but Baidu looks okay? Yes. So the Chinese market has huge opportunity in it as they're coming up. We're playing that through Baidu because Baidu owns 30% of Baba and IQ and Tencent and, you know, 7 different sectors. But China's coming out of the recession, coming out of their COVID, coming out of their shutdown. So the Chinese market does look good, but there's a trust factor there that you don't go all in or even into indexes because you just don't know. But yes, Baidu should be a big winner this year. Russ, did I answer your question? And Maud, did that answer your question about China? And Russ, were you just talking about the market in general? Why Disney was sold off from 208 down to 88? The market just overreacts. The market just does, it just overreacts. All right, thank you, Russ. Apple, yes, to answer Apple, would I be putting more money into Apple right now? No, it's fully valued. Does there an opportunity to go $45 higher? Yes. Between 225 and 237, yes, it does. But that doesn't mean that we're going to. I'd rather put new money to work in Disney than I would in Apple. Are there any other questions? If not, I appreciate you guys being here tonight. Russ, I'll give you a quick call. Expect no webinars next week, but we'll start up the following week. So enjoy a week-long summer break. And we will talk with you again in a week, I guess, not next week, but we'll talk to you again in 2 weeks. All right, talk to you later, everyone. Bye-bye.